In this video, you'll learn how to create true wealth. I bet you've come across tons of advice on building wealth and reaching that dream of financial freedom. You might even be on that journey right now, using tips you've picked up. But there's another crucial step to genuinely amassing wealth, and that's what I'm diving into in today's video. So grab a pen and paper and let's dive in. Get yourself a $100 note and spread it on the table before you. Think about what it means to you. For instance, what you could buy with it right now. For example, $100 buys a nice lunch for two at a good restaurant, a fancy pair of sneakers, a tank of gas for your truck, or a few bags of groceries. Or you might think about investing the money for, say, a year with an expectation of spending it once it has matured. Based on these options, it's easy to see that one view will keep you poor while the other will make you rich. Which one do you think will make you rich or poor? Leave your answer in the comment section. Consider the story of Mike Tyson. Tyson is one of the most celebrated heavyweight boxers of all time. Few athletes have known their way around the ring like Tyson did. In short, Tyson was a master of his craft. However, like most people, one thing eluded him: financial wisdom. After earning $300 million and living a lifestyle estimated to be worth at least $400,000 a month throughout his career, Tyson ended up bankrupt upon his retirement. The roots of Tyson's misfortunes can be traced to one thing: the tendency to understand money as a means of acquiring stuff, things that he mostly didn't need, although he wanted. And Tyson is not the only victim of a wrong attitude about money. Stories have been told of successful professionals, including lawyers, doctors, and CEOs, who had so much money at the peak of their careers that they didn't know what to do with it, only to end up broke and lonely upon retirement. These are people who never really learned how to think about money correctly, and I don't want that to be you. So if you want a deeper understanding of how money works and maybe even gain that financial education that school didn't give you, I made a financial course that will teach you the financial skills that school didn't. And all you need to do to access the course is become a member of the channel, which will cost you only $39 a month, and you can cancel it when you're done. So if you don't want to end up like any of the people I just mentioned, you need to shift your perspective from what your money can buy and redirect your focus towards what your money can do for you. One great way to invest your money is to invest in yourself. And by this, I mean buy wisdom and knowledge and apply that wisdom into your life. And once you have that wisdom, use that knowledge to make your money work for you. And this is essentially the foundation for building genuine wealth. If you can grasp this lesson, you will never be poor again. And if you want to, you can literally leave this video right now and you'll be okay. You have my blessings, just make sure to leave a like as you leave. So once you start thinking about money correctly, you will begin to realize that when you spend money, it's not just money itself that's gone, but also the potential earnings associated with it. This is not to suggest that we should never spend money, but rather to emphasize the importance of comprehending the consequences of our spending choices. Let's take the example of buying a $20,000 car. Even someone with minimal financial knowledge knows that once you buy that car is no longer worth $20,000, and nor has your net worth gone up by that much. Yet, surprisingly, many overlook this fact when they choose to lease or finance a car. And even if you do choose to get the car, it's going to end up costing you more than the initial $20,000. Why? Because of the opportunity cost. This term refers to the potential benefits you miss out on when you decide to spend your money on one thing, like that shiny car, instead of another potentially more lucrative option, like an investment. So every time you spend, think about what other opportunities you might be ignoring. Now, I'm giving you an example of the opportunity you have missed on if you chose to buy the car instead of investing the money. Let's use Vanguard's Total Stock Market Index Fund as our example, since it gives us a tangible number to use as our opportunity cost. Taking a conservative estimate from the fund, we're looking at an 8% annual return. Now, if you were to invest $20,000 at this rate, you'd be pocketing an extra $1,600 in the first year alone. So, when you decide to buy a car worth $20,000, you're not just spending the initial amount, you're also missing out on that potential $1,600 gain. That means in the first year, the car's real cost to you is $21,600. Now let's think long-term. Over a decade, with an 8% compounding interest, your missed earnings would amount to $23,178. So that $20,000 car, it's actually set you back by $43,178. And we haven't even factored in other expenses like insurance, fuel, and maintenance. And that's not even the worst part, as the original $20,000 is forever gone, and so is the potential compounded earnings you could have had year after year. This is just one example of the hidden costs behind every purchase. Ever heard of the phrase, the magic of compounding? It's like watching a snowball grow as it rolls down a hill. Initially, the money you save earns interest. Then, that interest earns its own interest. Over time, this creates a powerful cycle where your wealth grows exponentially, much like how a snowball gets bigger and faster with each roll. Reaching a point of financial independence is the ultimate goal here. It's that sweet spot where the returns from your compounded savings outweigh the opportunity costs of your expenses. When you hit this level, your goal is to reinvest your returns to stay ahead of inflation, because inflation is a wealth killer, and you want to make sure you're doing this all while ensuring your expenses don't deplete your savings. But if you're still on the journey to financial freedom, it's essential to view every spending decision in terms of its opportunity cost. Think about what you might be giving up in potential future earnings for every dollar spent. Remember, every bit saved now can lead to a more secure financial future thanks to the magic of compounding. Warren Buffett, the famous American investment guru, has been quoted as saying, "Rule number 1, never lose money. Rule number 2, never forget rule number 1. Unfortunately, too many people take this at face value and leap to the conclusion that Buffett has found a magical way to dance in and out of the market without being impacted by the inevitable shocks that are part of the market. But this is not true, and in fact, he is on record admitting to have said, "The Dow started the last century at 66 and ended at 11,400. How could you lose money during a period like that? Many people did it because they tried to dance in and out." The fact is that during the 2008 global financial crisis, Buffett lost about $25 billion, cutting his fortune by almost half, from $62 billion to $37 billion. Like ordinary investors, Buffett was unable to time the market and, in fact, maybe didn't even try. But unlike many others, Buffett didn't panic. He knew that such events were normal. In fact, Buffett continued to invest as the sharp decline offered new opportunities. When the market recovered, as it always does, so did Buffett's fortune and everyone who stayed the course. There are likely many reasons why Buffett was able to bounce back apart from staying calm as some $25 billion slipped away. One of these reasons is how Buffett thinks about the money in his investments. Buffett consistently aims to have ownership stakes in the businesses he invests in. These holdings may take the form of shares, or in some instances, he acquires them in their entirety. When the share price of one of his businesses experiences a decline, what he deeply understands on an emotional level is that his ownership of that company remains unaltered. As long as the company maintains its financial stability, the short-term fluctuations in its stock price hold relatively little significance. These prices may experience ups and downs, but sound companies consistently generate substantial earnings, and in the process, their intrinsic value continues to rise steadily over time. If you want to make true wealth, you must start thinking about your investments the way Buffett does about his. Let's return to our example, Vanguard's Total Stock Market Index Fund. Once again, to understand Buffett's investment idea. Suppose yesterday you said, this idea of owning Vanguard's Total Stock Market Index Fund makes sense to me. I'm going to try it. And having said that, you sent Vanguard a check for $10,000. At yesterday's close, the price of Vanguard's Total Stock Market Index Fund was $53.67. Your $10,000 bought you some 186 shares. If Vanguard's Total Stock Market Index Fund shares are trading at $56 per share a week from now, with a smile on your face, you might say, my $10,000 is now worth $10,434. I think I like this investment thing. If, however, the shares are trading at $52 per share a week from now, with a frown on your face, you might say, damn, my $10,000 is now only worth $9,689. This investment thing is a scam. This is the usual way average investors think about their investments. You shouldn't think like an average investor if you want to make true wealth. Take a few moments to to understand what you really own. You see, at $56 per share or at $52 per share, what you have to understand is that you still own the same 186 shares of Vanguard's total stock market index fund. And this signifies that you own a stake in practically every publicly traded company in the United States. Once you truly understand this, you will begin to realize that in owning Vanguard's total stock market index fund, you are tying your financial future to that same large, diverse group of companies that have a real influence on the global financial system. You see, in our complex world, money is the most valuable and potent tool for navigating it. Learning to wield this tool is crucial. It all starts with developing a thoughtful perspective on it. The good news is that it's never too late to embark on this journey. Now, can somebody please share this video with a friend or someone who needs to hear this, unless you want them to end up like Mike Tyson? That said, thanks for watching. Remember to give this video a thumbs up and subscribe to the channel if you are visiting for the first time. Until next time, have a great day.